Imagine yourself in a candy store. An overwhelming array of confections lies before you, but you're only allowed to buy one. Quite a dilemma, wouldn't you say? However, let's suppose you could procure a piece of everything with a single purchase. Sounds like a dream, doesn't it? Well, that, dear friends, is the sweetness of an ETF, an exchange-traded fund in the world of investment. But what exactly is an ETF? Is it a single grand chocolate bar or more like a mixed bag of gummy bears? How does it fit into your financial journey? Rest easy, this isn't a tricky journey through Willy Wonka's chocolate factory. So take a deep breath and let's unwrap the wrapper and delve into the enchanting world of ETFs. First off, let's address the elephant in the room, or should I say, the candy mountain in the shop. What is an ETF? Picture having a little piece of every candy in the store, all neatly packed into one delightful bar. That's what an ETF is. Unlike regular stocks, where you invest in a single company, an ETF represents a basket of stocks, bonds, or commodities. You could have an ETF that represents the entire S&P 500 index, or an ETF that represents the technology sector, or an ETF that's all about gold. It's like a sampler platter at a restaurant. You get a little bit of everything. This gives you the chance to spread out your risk. If one stock in the ETF takes a nosedive, the others can help balance it out. An exchange-traded fund is a type of investment fund and exchange-traded product traded on stock exchanges. Let's say you're interested in technology stocks. You could buy shares in individual tech companies like Apple, Microsoft, or Google. Or you could buy shares in a tech-focused ETF, like the Technology Select Sector SPDR Fund. This ETF holds a range of tech stocks, so with a single purchase, you're investing in the entire tech sector. While ETFs are akin to mutual funds, they trade like a stock on an exchange, offering investors a bundle of joy, just like a candy mix. The popularity of ETFs is surging, and for a good reason. Think about it. What if our candy store started selling a candy mix that included all your favorites? Wouldn't you want a bite of that? ETFs offer investors a taste of an entire index or sector without having to buy each component individually. For instance, consider the SPDR S&P 500 ETF. By investing in this ETF, you're essentially buying a piece of all the 500 companies in the S&P 500 index, which includes big names like Amazon, Berkshire Hathaway, and Johnson & Johnson. And you're doing this without having to buy each of these stocks individually. And let's not forget the cost efficiency. Buying individual stocks requires you to pay a commission for each transaction. If you're trying to build a diverse portfolio by buying each stock, this can add up. With an ETF, you can get that diversity in one fell swoop, paying a single commission. Plus, the transparency of ETFs is another compelling factor. Most ETFs disclose their holdings daily, allowing you to see exactly what assets you own. Now that we've whetted your appetite for ETFs, let's address another pressing question. How do you pick the right ETF for your investment portfolio? It isn't a one-size-fits-all situation. It's akin to choosing between a chocolate bar and a lollipop. Both are delightful, but they offer different flavors and experiences. The same goes for ETFs. When picking an ETF, you should weigh your investment goals, risk tolerance, and the ETF's expense ratio, among other factors. For example, if you're a young investor saving for retirement 30 years down the line, you might be okay with a higher risk, higher return ETF, like the Invesco Triple Q, which tracks the technology-heavy NASDAQ 100 index. But if you're closer to retirement, a lower risk bond ETF, like the iShares Core US Aggregate Bond ETF, might be more suitable. But you're not alone in this journey. There are resources and tools to help you. ETF databases and screeners can help you filter ETFs based on asset class, sector, and other factors. Remember, always look under the hood, understand the ETF strategy, its holdings, and its performance history. Compare the ETF with others in the same category. Be sure to check its expense ratio, as costs can eat into your returns over time. If you're finding this journey through ETF land enlightening and enjoyable, why not let the YouTube algorithm know you're having a blast? And like, share, subscribe, and hit the notification bell to stay updated on all future videos. And hey, here's a question for you all. If you could create your own ETF, what would be in it? Can't wait to see your creative and insightful responses in the comments below. Oh, and while you're here, don't forget to rummage through the description box below for some extra goodies and resources. Think of it as your personal treasure chest, albeit without the swashbuckling pirate adventures. Remember, just like our candy store that offers more than just chocolates and gummy bears, not all ETFs are the same. They come in all flavors. ETFs focusing on everything from broad market indices to specific sectors, commodities, and geographical regions. The choices are vast, but the right one will depend on your taste. Say you believe the clean energy sector is poised for growth. You could invest in the iShares Global Clean Energy ETF, which holds a diverse range of clean energy companies from around the world. Or, if you want to hedge against inflation with commodities, you might opt for an ETF like the SPDR Gold Shares, which tracks the price of gold. For instance, if you're a risk-averse investor looking for steady income, you might lean towards bond ETFs. If you're an investor willing to take on a bit more risk for potentially higher returns, sector-specific ETFs like technology or biotech could be on your radar. And for those who want a bit of international flavor in their portfolio, there are international ETFs that invest in foreign markets. And finally, remember, while we'd all love to have the golden ticket to investment success, it's crucial to balance your investment candy bag. A few chocolates here, a couple of gummy bears there, and voila, you've got a diversified portfolio that can weather any financial storm, or rather, any pesky cavity-causing financial setbacks. But don't stop here. As we navigate this financial candy land, remember to keep learning and growing. ETFs are an impressive tool in your investment toolkit, but they're just one part of the broader financial landscape. Continue to explore, keep asking questions, and most importantly, keep that financial curiosity of yours alive and kicking. Until next time, remember, the world of finance is your candy store. Don't just settle for a single sweet treat.